students. In the previous lecture, we have discussed CA Final AFM paper structure. By paper structure, I mean what will be the types of questions that will come in the exam, how many questions will come, and what will be the marks of those questions. Students, in this video, we will discuss logically the next step, that is paper pattern, AFM paper pattern. By paper pattern, here I mean what are the chapters included in your syllabus and what will be the chapter-wise weightage in the exam. So students, let's start our discussion. Now, in the beginning, I would like to show you the ICI study material for AFM and what are the chapters included in your syllabus. So please look at the screen. This is students. Here look at the screen. See, these are the chapters in your CA Final AFM syllabus. There are 15 chapters. The first chapter, Financial Policy and Corporate Strategy, it is a purely theory chapter. Then you have Risk Management. Then Advanced Capital Budgeting. This is the new chapter included added to your AFM syllabus as compared to outgoing SFM. Then you have Security Analysis and Security Valuation, chapters 4 and 5. Then chapter 6, Portfolio Management. 7, Securitization. Securitization is a purely theory chapter. Then you have mutual funds, chapter 8. Chapter 9 is on derivatives. Derivatives means futures and options. It is a very interesting chapter, students. Then chapters 10 and 11 are collectively referred to as Forex. They are relating to foreign exchange and financial management related to that. Then in chapter 12, which is closely related to chapter 9, derivatives, it is interest rate risk management. Here we will study interest rate derivatives. Then in chapter 13, business valuation. Now students, the chapter 13 business valuation is closely related to equity valuation, which is a part of security valuation. So these two chapters are very closely related, but ICI has put them widely apart. They should have been arranged just one by one. Then chapter 14, mergers and acquisitions. And chapter 15 is a pure theory chapter, startup finance. So students, overall, in your AFM syllabus, there are 15 chapters that you have to study. Now, let's come to our discussion. Now, students, here I want to tell you one thing, that the order of the chapters in your AFM study material, ICI study material, is not logical. You cannot study in that order, because if you do that, then your study will not be efficient and it will not be in the logical order. So what we have done is that we have rearranged the ICI content, all ICI study material questions, then practice manual questions, past exam questions, MTP, RTP and everything in the form of question bank in a new order, and that order is logical. Now students, you can see that order here in this chart. Here me and Aditya sir have prepared a chart. I will explain to you soon. Say here on the left side, you can see the various chapters, 1, 2, 3, 4. One is ACB, you can see. Then so on. So it goes to 11. Here the theory chapters. So we have rearranged this entire ICI content in logical order into 11 chapters, students. And all the faculties, they generally they don't follow the ICI order because it is defective. So this is the order that we will follow in our AFM regular batch as well as AFM revision batch. So this is the first clarification. Now students, here further what we have done, please read the title, CA Final AFM paper pattern and chapter wise weightage. Now, how we have prepared uh, this analysis. So on this, I would like to briefly tell you. Before AFM, there was SFM, which we refer to as outgoing SFM. So outgoing SFM is the syllabus that was in force for 6 years from 2018 to 2023. So starting from May 18, see here, these are the column titles and these are basically exam references. By May 18, I mean M18, I mean May 18. Then N means November, May, and so on. So here it is January 21. It is just after Corona actually. During Corona year, which was 2020, only one exam was conducted in November 20. And thereafter in 2021, there were three exams in January, July, and December. So then May, November, and so on. So the last exam in this outgoing SFM was conducted in November 23, students. So these are the 12 exams. So here in the rows, we have chapter titles and in the columns, we have exam titles. And these are the marks. Understand this chart. These are the marks. So the question, for example, here it is written EV and BV. It means equity valuation and business valuation. And here in May 18 column 21 is written. So it means that in from equity valuation and business valuation chapter, you had 21 marks of questions in May 18 exam and so on. In November 18, 20 marks question. Then in December 21, 20 marks questions. And May 23, 18 marks questions and so on. So this way you can read it for all the chapters. So students, this is briefly the arrangement of this chart. Now, what is the basis of this chart? See, it is based on May 18 to November 23 outgoing and old SFM papers. By old SFM here, I mean the syllabus that was in force before 2018. So in that syllabus, advanced capital budgeting was there. Advanced capital budgeting was not there in outgoing SFM, which was in force from May 18 to November 23. So students, we have combined the some portion of old SFM and the remaining portion from outgoing SFM because that is how it makes the AFM paper. So this is briefly the introduction to this chart. We will base our entire discussion on this chart, students. Here I would like to make one clarification that this discussion, this chart is based on a precise survey of ICI's papers and these are facts. See, these many marks of questions have been actually asked from the respective chapters in the respective exams. So no dispute is possible regarding this. It is not merely estimate. So now we will study briefly what are the contents of those chapters and what is the chapter wise weightage in the exam. But before doing that, I would like to show you one ICI publication. So please look at the screen. See, ICI has put up on its website what it calls section wise weightage. So here it has classified those 15 chapters in ICA study material, 15 chapters were there, into some groups which it calls sections. And sections wise rough estimated weightage is given here. Estimated weightage. Say for example, in first section there are 3 chapters and it has 8% to 15% weightage and so on. So we will put below the video in the downloadable form. We will put below the video links of this also and of our this chart also. So you will also find them in our on our website under free resources section. So from there also you can download them, students. So here what ICI has done is that in this way it has classified these chapters into 6 sections along with estimated weightage of those sections. But however, what I have found here is that this analysis is not it does not have any significant guidance value because of few reasons. The first reason is that this weightage is only an estimate. It is not the precise figure. The precise figure is what we have mentioned in the chart. Second thing, it is not chapter wise, it is group wise, section wise, group wise. So it does not tell you how many marks will be there of each particular chapter. Then students, it is percentage wise, it is not in the form of marks exactly. And another strange thing that ICI has done is that irrelevant chapters, means irrelevant, so illogically the order is not logical. So logically unconnected chapters have been grouped together. In one group, ICI has classified logically not related chapters. So this is also something very odd. So this is why we were required to do this different type of analysis. Now let's let's come to our discussion. The first chapter is ACB, Advanced Capital Budgeting. Here I have written short forms for the chapters. So I will let you know what it means. ACB means Advanced Capital Budgeting. So here 3 is written, you can see. See, this 3 means the chapter number in your ICI study material. So this is the third chapter in your ICI study module, you can see. You will find this in your index of ICI study material also, chapter 3 Advanced Capital Budgeting. So here it is identified in red color. Now this is the weightage, students, 8 to 10. So we expect 8 to 10 marks weightage from ACB paper. Now here see, in CA Inter FM also you have studied the basics of capital budgeting. Now what we are going to study here, we will study the risk analysis in capital budgeting. In old outgoing FM syllabus, there was a chapter risk analysis in capital budgeting. However, it is not the same thing as this. That was a very shallow chapter and no depth was there. Here, this chapter has many concepts and those are discussed in depth. So, depth wise, if you see, this chapter is much bigger than corresponding CA Inter chapter. So, don't confuse that CA Inter syllabus has been shifted to CA final syllabus. It is not like that. Its weightage will be 8 to 10 marks, and we have estimated this weightage on the basis of the weightage of advanced capital budgeting chapter in old SFM. So for many years, more than I think 15 years, in the same range, the questions used to be asked in old SFM. Okay. Now this equity valuation and business valuation. It is the second chapter as per our logical order, students. Now first let's study that what will be there in this chapter. Let's have an idea what will be included in this chapter. So equity valuation and business valuation. In equity valuation, we will study how to determine the value of an equity share. Now see, when you buy and share, you pay the price. So price is something which you pay and which prevails in the market. Let's take an example. Suppose there is a share, it is trading at rupees 200. So I buy the share at 200 rupees. This is its price. Now, what does value mean? Now see, if I have this share, then in future I will get some cash inflows. So what will be the cash inflows that an investor gets from shares? So you will say that it is dividend and expected selling price when he sells that share. So students, the present value of all these dividends and expected selling price, that is the future cash flows, is the present value, and the sum total of that, it is the value of the share. So this is basic concept of value. Value is what you get. See, price is what you pay and value is what you get. Suppose by using the techniques of this chapter, we determine that the value of the share which I was just talking about is rupees 250. Now value is 250 and price is 200 and I have bought the share. So what does this mean? I know that the value is 250. The market knows that the value is 250. So all people will buy the share and this buying pressure will raise the price. So in equilibrium, students always remember that price moves to value. In other words, value is a sort of expected price. Value is short of expected price. Price moves to value. So here we expect that the price 200 will move towards 250. And as it reaches 250, I can sell the share and make a profit of 50 rupees. So students, the difference between, what is the difference between 250 and 200 for me? For me, it will be the expected capital gain. But in finance, it is the nothing but NPV, you can understand. See, price is something like initial investment, the price which you pay. And value is something that you will get. So the same thing as you have studied in capital budgeting at CA inter level. Value of the project is what the company gets. An initial investment of the project is what the company pays. So the difference, excess, is called net present value. So by that much amount, the wealth of the shareholders of the company will increase. So here also 250 minus 200. So 50 rupees is the NPV. Or expected future capital gain for the investor. Now, by that amount, the investor's wealth will increase if he buys the share. So, all this is the brief introduction of value and related dynamics. Now, students, in this chapter, equity valuation chapter, we will study various methods of determining the value of an equity share. Okay. Now, what is business valuation? See, business valuation means the value of the business. So, suppose the company I am talking about has 1 crore shares outstanding in the balance sheet. 1 crore shares. Now, value of one share is 250. So, what will be the total value of all the shares? 250 crores? 250 rupees into 1 crore shares. So, this 250 crore is nothing but the value of the business, value of the company. So students, fundamentally speaking, the difference between equity valuation is and business valuation is just the number of shares. So this is way, this close way, these two chapters are related. However, still the ICAI has put them differently. In chapter 5A is equity valuation and chapter 13 is business valuation in ICA study material. However, we have clubbed them together. In fact, the chapters are so interrelated that in the exam many times when the question is asked, you cannot clearly identify really to which chapter it belongs. Okay. Here 5A, so here I would like to clarify that chapter 5 is on security valuation. So here there are two divisions in that chapter, equity valuation and bond valuation. So equity valuation is 5A and bond valuation is 5B. Okay. Then next chapter is the security analysis. It is also closely related to equity and business valuation. So we have included it in the second chapter here in our order. So that is chapter number 4 in your ICA study material. In security analysis, students, we study basically two things: fundamental analysis and technical analysis. Fundamental analysis is relevant for an investor when he buys the shares for long term. See, whenever an investor is planning to buy the equity shares of a company for long term, say for a few years, then you should perform the fundamental analysis of the company. But if his horizon is small, say if he just one day trading, that he buys the share in the morning and sells it in the afternoon, or suppose he sells within 2 3 days or within a 1 month or so, means his horizon is short term, then what he does is technical analysis. Now what is included in fundamental analysis and technical analysis, that we will study in this chapter. So all the three chapters are related to stock market and corporate valuation. So this is three are very important, interesting chapters. And at the same time, students, now let's come to their weightage. Now, this second chapter means it is a group of three chapters. It has the maximum weightage in your CA Final AFM syllabus, 18 to 28 marks. So, in fact, how we arrived at this figure? So, these are students, the exam wise marks you can see. These are exam wise marks. In May 18, you had 21 marks of questions in your outgoing SFM paper from these chapters. Then in November 18, 20 marks, May 19, 32 marks, November 19, 24 marks, November 20, this is the maximum C. In November 20, 36 marks of questions were asked from these three chapters, means second chapter here. Then in January 21, it reduced to 8 marks, then 24, 20, 24 and so on. In November 23, 20 marks worth of questions were asked from this chapter, students. So how we arrived at 18 to 28? Now see, we took an average of this range, and then we slightly downsized it because now as compared to outgoing SFM, some new additions are there in your CA Final AFM. So we slightly downsized that, and then we arrived at this range. So we expect this way that 18 to 28 marks range, the questions should be asked from this chapter, 18 to 28. Of course, the figure can go outside the range because here the way it is fluctuating, you can see that it is possible. But don't be afraid by that because we are going to study all the chapters and we are also going to study them in conceptual depth. So even if the final in the exam, if the questions are asked beyond this range, then we will not be in trouble. Another important feature that emerges from this pattern is that there is a risk. Risk means the marks from a particular chapter are quite fluctuating. So here you see there are 36 marks of questions in November 20, and in January 21 only 8 marks worth of questions were asked. But on an average you see it has remained around 20 minimum. So we expect 18 to 28 marks. Okay. Now students, let's come to next chapter. Next chapter is mergers and acquisitions. Now mergers and acquisitions is nothing but the amalgamation chapter in your accounting, continuing further. This chapter is, the beauty about this chapter is that it is very easy. It is very easy for the students to solve the sums of this chapter. So here what we will study, we will study that if the amalgamation means merger takes place, suppose X Limited is there and I am holding some shares in X Limited. Now X Limited is merging with Y Limited. So Y Limited is absorbing X Limited. So you can understand that in exchange for my shares in X Limited, I will get Y Limited shares. The merger is by way of issue of shares. So I will get Y Limited shares. And in the merged company, what will be the price of the Y Limited shares? And whether my wealth will increase or decrease. And if it increases, then by how much amount it will increase. That is what we will calculate in this chapter, students. So in this chapter, we will study the effect of merger on the wealth of the equity shareholders of both companies, transferor company and transferee company. The weightage of this chapter in the final exam will be around 8 to 10 marks. So here you can see the pattern. 8 marks, 12 marks, generally 8 marks. In this exam, 0 marks. So in November 20, the weightage of this was 0. I will tell you why. It is 0. And thereafter 18 marks in January 21 and thereafter 8. So 8 marks almost you can see minimum consistently maintained. So we expect that 8 to 10 marks of weightage of this chapter, students. Now these three chapters, 1, 2 and 3, they can be placed in one group. They are interrelated. They basically all use the discounted cash flow technique for valuation. So they are all interrelated. And you students, you can see that for the group as a whole, generally the expected weightage is maintained. See here, for example, in November 20 exam, 36 marks worth of questions from equity valuation and business valuation. So this is why here we had no questions from mergers and acquisitions, because for the group overall, this is in these two chapters are in the same group. So total wise, ICI will generally maintains the weightage. So here you don't have any questions. So this is the reason. Here you see 8 marks, only 8 marks of questions from equity valuation and business valuation in January 21 exam. So you have 18 marks, more weightage was given to mergers and acquisitions to balance the group students. So these three chapters are in first group. Now let's come to the second group. In the second group students, chapter number 4, 5 and 6 in our order. We will study chapters in this order. This is the logical order. You have portfolio management, which is chapter number 6 in your ICA study material. Then you have mutual funds, which is chapter number 8. Here chapter number 5 in our order. Then risk management and value at risk. VAR means value at risk. That is chapter number 2 in your ICI study material. So these three chapters, now their weightage, let's see their weightage first. Portfolio management, it is 8 to 18 marks. Mutual fund, it is 8 to 16 marks, so almost similar weightage. And risk management, 4 marks. 4 marks almost appears to be fixed here in every exam except one. Let's see which exam is there. In January 21, there was no question. Otherwise, in all the 11 exams of outgoing SFM, 4 marks of question has always been asked, and we expect the 4 marks weightage to continue for risk management. And here also, let's see internal pattern. So for portfolio management, 8 marks minimum you can see, except this exam where it was 0. Otherwise, you can see here 24 marks. 24 marks is the maximum. So from portfolio management, in November 22 exam, 24 marks worth of questions were asked. Now let's come to mutual funds. So in mutual funds, you observe chapter 4, 5 and 6 are in the same group. So whenever there are two less weightage for portfolio management, the weightage for mutual funds will be high, and vice versa. If the weightage of portfolio management is high, say 24 marks here or 22 marks here, then the weightage for mutual funds will be less. So here also you observe. Okay, so from this group as a whole, ICI has a unique weightage. This is logical group. See, the groups which ICI has created in its section wise weightage, they are not logical, and there you will not be able to find such patterns. So here students, you observe that here this is November 20 exam. November 20 exam, no questions from portfolio management, and 22 marks worth of questions on mutual funds. And here 24 marks worth marks in November 22 exam, and only 8 marks worth of questions from mutual funds. So this is the way pattern. But on an average, students, 8 to 18 marks, 8 to 16 marks for mutual funds, 8 to 18 marks for portfolio management, and 4 marks for risk analysis, risk management and VAR. Now let's briefly discuss what will be included in these chapters. See, in when he invests in stock market, so you tell me how he will divide his funds. Suppose I have a fund of 1 lakh rupees. Now, should I buy the shares of only one company, or should I invest it in the basket of many shares of many companies? So your answer will be that I should invest in the shares of many companies. Why? Because see, if I invest in say 10 companies, then what will happen? If something wrong happens, if my forecast goes wrong, if the prices of one particular company shares goes down, then if I invested it in the basket, then shares of other companies will not necessarily fall. On the contrary, the prices of some other company shares will rise. So it will balance my loss in the first company shares. So if I invest it in a basket, then the risk is less, loss will be less. So this is called diversification, students. So we will study diversification in portfolio management. Then we will study what will be the optimal portfolio or the best portfolio. See, investor always tries to determine the best portfolio for him. So how to create the best portfolio, that we will study the in portfolio management. How to select the share for investing in the stock market, that you will study in equity valuation and business valuation. That how to find the share for investment from the stock market. Then how to create a portfolio, that you will study in portfolio management chapter. And here also we will study the relationship between risk and return. Now remember, the theoretical foundation of this chapter, it underlies many big industries in the economy or in the stock market. Say the entire mutual fund industry, the entire portfolio management industry, portfolio managers, and all that. That is based on the fundas of this chapter. So this chapter is very important from stock market point of view. Then you have mutual funds chapter. So see, if you want to invest in stock market, then you can always do it in two ways. The first is you directly invest. You buy the shares. They will be in your demat account. Or you can alternatively invest in the units of mutual funds. The share capital of mutual fund is divided into units, capital. So it is called unit capital, and you buy units. Now the mutual fund invest the collected funds from all these investors directly into the stock market, following the principles of portfolio management. And then whatever returns the mutual fund gets, it will be distributed to the investors of the mutual fund, and the mutual fund will be managed professionally by fund managers. So everything about mutual funds we will discuss in here chapter number 5. Then what is value at risk? Now see, value at risk is briefly the maximum possible loss over one day in an investment. Suppose I have an investment of rupees 10 lakh in the shares of a company. Now I would like to know, and the regulators also want to know, the stock exchange, etc., that what will be the maximum possible loss from this investment over one day. So that is called value at risk. So suppose we calculate it at rupees 20,000. So here it means that I have a 10 lakh rupees of investment in the shares of a company, and my maximum possible loss over one day will be 20,000. So it means practically that I should be prepared for this loss, and the chances of loss being more than 20,000 are remote. So how to determine this value at risk or maximum possible loss over one day from an investment, that we will study in this particular chapter. So chapter number 4, 5, 6 are in the second group. This way we will divide the total AFM syllabus into 4 groups. In the first group, you have advanced capital budgeting, equity valuation, business valuation, security analysis, and mergers and acquisitions. In the second group, you have portfolio management, mutual funds, and risk management and war. Now, chapter number 7, 8, 9, 10 here in our order, they are placed in the third group. This is the third group, 7, 8, 9, 10. So, chapter number 7 is on derivatives. It is chapter number 9 in your ICA study material. It includes futures and options. Then chapter number 8 is Forex. Forex, I mean foreign exchange and related financial management aspects. So chapter number 10 and 11 in your ICA study material are relating to this chapter. Then chapter number 5B is related to bonds and MMIs. I will soon explain what is the meaning of these two. Then interest rate risk management, which is chapter number 12. Now students, let's briefly discuss what is included in these chapters. So let's come to the derivatives first. Now see, when you invest in the shares of a company, suppose I invest in the 500 shares, I buy 500 shares of a company, the price is 200 rupees. So how much total investment? 1 lakh rupees, 200 shares, 200 rupees into 500 shares. Now suppose I expect that after 3 months the price will rise to rupees 240. So 240 means 40 rupees gain. Right now it is 200. So it is how much return that I am expecting. 40 rupees on 200 means 20%. So I am getting 20% return if I invest in the shares of this company. Now here in derivatives, we have some financial instruments, say called futures and options. So in futures, what the futures do, that if you buy the share futures of this on this company shares, which I am just talking about, if you buy futures on this company shares, then it will give you 100% return, means 5 times more return. From shares I am getting 20%. If I invest in shares I get 20%, but if I buy futures on these shares, then I will get it 100%. So it will multiply the return by several times, say here in our example 5 times. So this is why it is called leverage instrument, means it multiplies your return. So if the return is this works both ways. So if I get 20% negative return from the shares, then also here if I buy futures, then my loss will also be 100%. So this appears to be very risky, and you are right. So this is briefly what futures are. We will study more about futures uh, in this chapter. Then we have options. Now what are options, students? Basically options uh, are financial instruments that if you buy options, then you have to pay a price. First of all, if you buy options, you have to pay a price. But the options give one guarantee to the buyers, that in future they will only get profit. They will be protected from loss. They will not get any loss. It means that if the price rises, you will get the price rise. For example, do you remember I was talking about the shares of a company, just 200 rupees price, and I'm expecting it to go to 200, 240 rupees, 20% return. So now if it rises to 240, I will gain if I buy the options on this company shares. And if it falls, suppose it falls to 160, then I will be protected. I will not get anything, no profit, but at the same time no loss also. So my payoff will be zero. Of course, to get this type of a privilege, I will have to right now pay the price when I buy the option. So options are financial instruments, okay, for which you have to pay a price when you buy, but in future they will guarantee you only profit. I'm just introducing you to the options in simple way, students. So here futures and options will be there. Then let's come to what will be the weightage. Let's come to the weightage. The weightage of derivatives chapter is 18 to 16 marks. Now this chapter is very interesting, but the strange thing is that the weightage is not that high. It is only 8 to 16. And these are the exam wise fluctuations. You can see derivatives 9 marks, 8 marks, 16. But on an average you can see that below 8 marks it has never gone. So here some consistency is seen. So 8 to 16 marks worth of questions we are expecting from derivatives. In the last SFM exam, November 23, a maximum weightage, 18 marks. See here I have red circled the maximum and minimum figures. If the minimum figure is 0, then the next highest figure is I have taken. So here it is 8 minimum and 18 maximum, like that. But in general 8 to 16 marks weightage we are expecting. Now students, in forex actually what happens, that when you invest or when you borrow or when you issue shares in a foreign company, a foreign country, say for example I invest in America. Suppose the company takes up project in America, so then it will have to pay dollars in US dollars. Or if it is exporting to American clients, customers, then it will receive US dollars. So you see the financial management will be normal, all everything will be normal, except that a spectacles of foreign exchange rate will come in between. So students, in forex chapter we will see the financial management by after wearing the spectacles of foreign exchange rate. For example, here 1 US dollar is equal to 82 rupees right now. So using this through this exchange rate, it will come in between. we will see the entire financial management if we have financial dealings in America. So in this chapter, basically we will study how the exchange rate is determined, and then we will study the regular chapters of finance. For example, capital budgeting. So here we have international capital budgeting, then we have international financing and investing, then we have international working capital management, and then we have risk management and so on, students. So all this we will study uh, in forex chapter. And what will be the weightage of the forex? Now see, forex has a very high 14 to 28 marks. 14 to 28 marks, students. So 14 to 28, it is almost similar to equity and business valuation, where it is 18 to 28 marks. So students, these two chapters, equity valuation, business valuation, and here forex, they stand out to be the most heavy chapters marks wise in your AFM syllabus. Okay, now let's also look at a view. Okay, what was the individual weightage in different exams? So here's a 16 marks. This is May 18. Then 24 marks twice thereafter. November 18. This is May 19. November 19, 20 marks. And then 28 marks worth of weightage in November 20. See, November 20 exam, it was the most difficult exam in the entire SFM, outgoing SFM syllabus. November 20 paper was the most difficult one, and in this paper it was difficult one because most of the questions were not repeating and were novel type of. Now here you see the pattern: 36 marks worth of questions from equity and business valuation, then 22 marks worth of questions from mutual funds, then 28 marks worth of questions from forex. So from these three chapters itself, you see 22 marks mutual funds, 28 marks forex, and 36 marks from shares, equity valuation, 36 marks. So total 86 marks of questions, 86 marks of questions were asked from these three chapters only. In November 20 exam, you observe one unique thing, that from equity valuation, business valuation, mutual funds, and forex, 86 marks worth of questions were asked. Okay, students. I would like to make some clarification here. Uh, that here foreign currency derivatives. See, in forex, we will also study foreign currency derivatives. These are the futures and options on foreign exchange rate. So this also foreign currencies. So this is also we are going to study. Okay. Now here real options. Now see, real options means the option like situations. I describe the options in along with derivatives, if you recollect. So here see, in options, you pay the price right now. In future, only profit is guaranteed. So many times such options are seen in projects. Projects, I mean the projects which you study in study in capital budgeting. So these types of situations are called real options. So students, the real options portion is actually an intersection of derivatives and advanced capital budgeting. So it is a very interesting thing. However, the weightage of real options in exams is very limited. Rarely questions come from this chapter. It was there in old SFM syllabus, but rarely questions used to be asked on real options. But whenever the questions were asked, whenever the questions have been asked, they have been found to be very difficult. So about real option, students, which is a new topic in AFM, it was not there, remember, in outgoing SFM. In outgoing SFM, capital budgeting, advanced capital budgeting, and real options both were not there. But in older SFM, that was before 2018, which was in force before 2018, both were there. So if you observe, there are two important things you can notice about real options. That first, the questions come in the exam very infrequently, very infrequently. And a second, whenever it comes, it happens to be a very difficult question generally, very challenging question for the students. Okay. Now let's come to the next chapter, bonds and MMIs. So what are bonds? See, equity shares are basically variable return instruments. That the what return you get when you invest in the shares? Dividends. So dividends are fluctuating. They are risky. Company may or may not declare them. Bonds are fixed return investments. Here the return is in the form of interest, and for the issuer it is a liability. Equity shares, for the issuer it is capital. So your repayment is also guaranteed for bonds because it is a liability. MMIs means money market instruments. The difference between bonds and MMIs is bonds are also known as debentures. That bonds and debentures are long term, means more than 1 year. Their term is more than 1 year. If the term is less than 1 year, that if they are issued today and redeemed after 3 months, then that type of debt instrument is called money market instrument. So all money market instruments are basically debt instruments with less than 1 year maturity. In on both bonds and MMIs, the issuer pays interest. So we will study their valuation and everything other related aspects in chapter number 9. Let's come to the weightage. The weightage of bonds and money market instruments will be 4 to 8 marks. However, if you observe students, in many exams, in 4 exams, there were 0 marks questions, means no questions from this chapter. You see in these two, which exams let's identify. It is May 19, November 19. So May 19 in November 19, then in November 23, this is the last exam, and this is it is May 22. So in 4 exams, May 19, November 19, May 22 and November 23, there were 0 marks questions or no questions from bonds. So this chapter is very risky. And in November 18 exam, this is November 18 exam, 20 marks worth of questions were asked, 20 marks worth of questions. So this chapter is also, students, marks are very fluctuating. So the chapter is also risky in that sense. But on an average, we expect 4 to 8 marks weightage. Then interest rate risk management. Now interest rate risk management is the last chapter in the third group. It is chapter number 12 in your ICI syllabus. Bonds is chapter number 5B. I told you 5A is equity valuation. So in chapter number 12, here also the weightage is 4 to 8 marks. The marks are highly fluctuating, you can see. The maximum was 16 marks in November 23 exam. And here 0 marks in May 19 exam, 0 marks. So what we will study in interest rate risk management, this chapter is actually closely related to derivatives chapter. Here we will study the derivatives on bonds and loans, derivatives on futures and options on bonds and loans. So more I will not discuss right now. Then we have last group. Chapter number 11 itself is the last fourth group. In this group, we have 3 chapters. All the 3 chapters are pure theory. So what are these 3 chapters? Let's briefly look at them. FPCS means Financial Policy and Corporate Strategy. So this is chapter number 1 in your ICI syllabus. And the weightage will be 0 to 4 marks, students. Mostly 4 marks you can see questions, and in some exams 0 marks. So you have 0 to 4 marks. Then chapter number 7 in your ICI study material, and here it is securitization. Chapter second part in chapter number 11, securitization. Here the weightage is fixed of 4 marks. So 4 marks of weightage for this chapter is fixed in your AFM exam. In all exams you can see, in some exams 8, in one exam 8 marks, 2 exams 8 marks, otherwise 4 marks consistently. Same thing is true about startup also, startup finance. Startup finance is chapter number 15 in your ICI study material, and here it is the third in pure theory chapters. So here also the weightage is fixed at 4 marks. Consistently 4 or higher marks questions you can see here. So total weightage for this pure theory chapters will be 8 to 12 marks. How much? 8 to 12 marks. This is group 4. So let's briefly recapitulate once again. See, you have chapter number 1 to 3. This order is very logical, students. So if we follow this order in teaching and learning SFM, AFM, teaching and learning AFM, then it will be very convenient for you to understand all the concepts, and just as if you are drinking a juice, you will be able to understand the complex concepts of all these chapters. So chapter number 1, 2 and 3, they are in group 1 and their weightage 8 to 10 marks, 18 to 28 marks and 8 to 10 marks. Then you have chapter number 4, 5 and 6 in the second group. There you have 18 to 18 portfolio management 8 to 18 marks, mutual fund similar weightage and risk management 4. See, in risk management also 4 marks questions is almost guaranteed in every exam. Mostly it happens to be practical in 90% of the times, and in 10% of the times it may be a theoretical question. So for these 4 marks, and here this is group 4 pure theory chapters, the fourth group. 3 theory chapters were there. So here also 4 marks worth of questions. So this is also quite scoring, students. It does not take much time to prepare for these chapters, but the marks wise the outcome is very good. Then in the third group, you have 4 chapters: derivatives, forex, bonds and interest rate risk management, and their weightage respectively is 8 to 16 marks, 14 to 28 marks, 4 to 8 marks, 4 to 8 marks, students. So this is how we have divided the AFM chapters into 4 groups, and these are chapter wise weightage, and this is factual. Remember, these figures are facts, so no dispute is possible regarding them, and we have calculated this range by appropriately downsizing the average marks of these chapters. So this this should be a reliable analysis for you. Now let's discuss, students, last 2 topics. The one is theory questions. What will be the weightage of theory questions? It is around 16 marks weightage is expected. It should decrease. In AFM, actually it was 20 to 24 marks, but since now there are MCQs, so we expect that the weightage should decrease. So on an average 16 marks, range 8 to 20. 12 to 20. Range will be 12 marks to 20 marks, an average 16 marks, and it is included in all this. Remember, this chapter wise marks, they include the theory also, the weightage of respective theory questions also. So I have written here included in above. Okay, and out of this 16 marks, 8 to 12 marks weightage will be from these 3 chapters only. So these 3 chapters last in the fourth group, they are very important for the theory, students, remember. Okay, then the last topic to discuss is novel questions versus repeat questions. Now see, we have 2 types of questions coming in our AFM exam. By repeat questions, we mean the questions asked earlier in earlier exams or seen in module, MTP, RTP or practice manual, and then again coming same type of question with change in the names and language, figures almost pattern same, so coming in the exam. So here the student, it is very comfortable for the students to attempt these types of questions because they have already studied. They will be found in large numbers in question banks also. So students, this is the repeat questions and they are very comfortable for the students. So on an average, we expect 70% weightage. 70% weightage on an average for the repeat questions. Then novel questions means that they are on concepts, but they have not been asked before. So students, you will be able to attempt novel questions if and only if you have acquired conceptual depth in the subject and you have well developed your problem solving skills. So that is what we are going to do in our regular batch. So around 30 marks worth of questions, we are expecting novel questions. We are expecting 30% of total. Okay. Now, if you see exam wise, then November 20, this is November 20. See, November 20 exam supposed to be the toughest paper in outgoing SFM. 57.5% questions were novel type and 42.5% questions were repetitive. So this is the reason why this question paper was found very tough by the students. In these 4 exams, you observe, these 5 exams. Here it is the novel questions 0% and repeat questions 100%. So they were very easy exams of outgoing SFM. Let's identify which. May 18, November 18, then November 19, then July 21 and December 21. In these 5 exams, there were no novel questions at all and only repeat questions. In May 23 exam also, students, 48% questions were novel questions and 52% repetitive. So you can see this. So this is the analysis of novel versus repeat questions. One thing I would like to tell you that in recent exams in May 23, November 23, ICI has been asking partly novel and partly repeat questions. There is 80% of the question is repetitive, but 20% is novel. Some new topic is new type of question is added. So this trend may well continue in AFM. But in any way, if you have studied conceptually, then you will not face any trouble whether it is repeat question or novel question. And we have also framed and included in our question bank typical novel questions also. So that way also you will find it comfortable. Another thing is that around 30% will the 30% 30 marks weightage will be of MCQs, case based MCQs, and 70% descriptive questions. So this you already know. We have also published a separate video on how to prepare for MCQs, so that also you can watch. So students, in this way we have completed the discussion on the AFM paper pattern and chapter wise weightage. I hope that all your doubts relating to this topic are clear. So we conclude our discussion, students. Thank you.